Welcome you all for the Mastering the Art and Science of Stop Loss Management. I am Raju Angadi Vishwanath, a SEBI registered research analyst, a chartered market technician, and a certified financial technician from US. With a happy morning to all. We are going to learn effective stop loss management strategies today. In this session, I'm going to share with you a lot of insights on how the trends should be ridden and how to maximize your profits and reduce your losses. The management is the key in your trading, the trading life cycle, what we need to understand, we are going to learn in this session. So let's kickstart the session. Give a thumbs up, guys. We are going to start the session with bang. Happy Sunday with your energetic time. We are planning to start the session. I'm going to answer your Q&A. First part of the session, we are going to discuss all the techniques and the simple methods which are applied and used to manage the stop losses and trade wisely and smartly with out of the box techniques which are simple and effective of them, which we are going to learn. I'm going to share the charts as well, how to use them in a simplistic manner, and we are going to learn a lot of things. Exciting times ahead. Be till the end of the session. Enjoy the session. Learn, earn, and prosper. So I'm going to brief about me, a small brief on me, like what do I do? Who am I? You are going to understand a small brief. I'm RV Raju Angadi Vishwanath. As I said, I'm a SEBI registered research analyst, certified financial technician, CFT from IFTA US, chartered market technician from MTA US, with the 15 plus years of experience in providing the research in the sell side brokering firms and mid-sized brokering firms. I advise on equities as well as commodities. I do work as a consultant with a couple of mid-sized brokering houses on the research desk. Also, I advise my own set of clients. I'm a SEBI registered RA as it is. I hold the expertise in price action, Elliott waves, and building the real-time trading strategies based on the market behavioral analysis. So that's a small brief on me. Let's start the session with banks. What would be the agenda of the session? What are we going to learn in this year? How you will be benefited? I'm going to explain in small, simplistic way. All the techniques are simple, but effectively, if you apply, it's all tweaked techniques. Although we know certain things, but how to apply them in the real-time markets, which helps you protect your company or your trading losses and enhance your profits. So what should be our goal? To increase our profits, reduce the losses. Ultimately, that is the goal where we are going to achieve the profits. So the agenda of the session, what are we going to learn? Smart zones of confluence, the areas, the price zones where how it should be used, the techniques, how it should be used and modified. Super trend, how to use it as a trailing stop loss in a revamped way. VMA, volume weighted moving average, how to identify the trends using that. We are going to learn a certain techniques which would help us definitely to apply it in the real-time markets, which I do use personally while providing my research and applying the trades, taking the trades. I'm going to share the charts as well. So first we are going to learn the concepts, then I'm going to share the charts so that we can learn the theoretical part as well as the practical aspects of trading, where how to manage your trades with the trailing stops. Like the main agenda of the session is, most of you, when you apply a stop loss after a trade is taken, your stop loss is triggered, you are facing the problems, how to adjust your stops. It's both an art and science. Like we need to learn the art as well as science of adjustment of a stop loss. The lowest the risk, higher the reward. So that adjustment only gives us the better results where we can gain edge over the other traders to become profitable. So we are going to learn those techniques. Then we are going to see the same in the charts, how it practically works, the small and the smarter adjustment of the stops, and strictly applying the stops in a proper way, which would help us become a better trader over the others. Because a penny saved is penny gained, is what it is said. So save your money for the another day, protect your stops. So we are going to learn most of the things. Going ahead, let's go ahead. Like what the Becky Novak has said, offense can win you games, but defense can win you championships in a longer run. If you need to sustain, you need to keep the stops in a proper way. Hope the screen is visible to all. I believe the screen is shared and it's visible to all of them. The screen is visible to all of them, I believe so. Am I clearly audible as well? Hopefully screen also is visible to all. I'll answer all your queries. Please keep your hands down. I would be answering after the part of the session what we would be discussing. So just a brief about me I have explained. I would repeat. And the agenda of the session, what we have been discussing, that's what we have discussed. And now, and also going ahead, we are going to discuss the more insights and the practical aspects of the trading. So let's kickstart. Let's come back to the session back again. As I said, offense can win you games, but if you have a proper defense, it can win you championships. The wall of cricket, what we call the Rahul Dravid, all might have heard about a wall of India or a cricket. Our most beloved Rahul Dravid, whose defense was such strong that bowlers used to be scared of him. So if your defense is strong, you can attack anytime whenever you get a good opportunity. Oh, let's start with the smart zones of confluence. How to read the tape or a charts, the fine prints of the chart, what we need to read. Although we know many things, but how to use it is the key. In a revamped way, in a tweaked way, we need to understand and learn how to use it. So we know the price action zones has a resistance and supports, which is the simplest of the price action form. The resistance is formed where there is a congestion area near the top, and the support is formed where there is a base where the price is holding up on the downside and trying to bounce back. So that is what we call the price congestion areas. Here what we are seeing, I'm going to share more on the charts. So smart confluence zone is first part. We are going to learn to identify the support and resistance. I'm not going to define them, as we all know what is support, what is resistance. Support is the area where the price holds and starts moving higher, and resistance is a zone where price is unable to cross and starts moving down, is a simplistic way. As we see the higher tops and higher bottoms in the price, the resistance is formed and the support is formed as per the charts. So here is a chart. It's a nifty chart. I'm showing you a weekly chart. The markings have been done. The down arrow is a resistance, which is brown colored, and the up arrow is a support, which is black colored. See, what do we need to see in this chart? Okay, everybody knows horizontally, if we draw a line, it's a support, and resistance which would act. Like we call it as a tennis ball theory, where the ball, let us suppose if we have a ball here, start bouncing from here and it touches, if you throw the ball, the roof where the resistance zone is formed here, then the force reduces and it takes a support. If you put a hand, then you push it again, same thing, it acts as a resistance. Then again you put a hand in between, here the support is taken, here the roof, the resistance is done, and at the base the floor would act as a support zone. So that's how the support and resistance would be acted. It's called as the tennis ball theory. Well, what I'm going to trying to share you on the charts. Let me clear all the drawings for you. So what do we need to observe here? As we all know the support and the resistance zones, but start observing the chart from right to left. What am I suggesting you? Start observing the chart from your right side to the how to read the charts, where there is an important area of congestion or confluence, where the more number of points meet or connect. I am going to show it to you on the real-time charts as well, but now we are going to understand it here. Start observing the chart from right to left, where I have marked the zones of confluence. It's the area where the more number of points meet. That is what we need to understand. From where the rejection starts, just above that, one needs to use the stop loss. So this is the first part of SR. SMART means support and resistance. One, the other one is how to use the moving averages as your stop losses. I'm going to explain and how to differently draw the trend lines where one needs to understand. So multiple, then we are going to understand the super trend, VMA, and other tricks to apply on the stop loss. So are you guys getting me? Just see the chart from right hand to the left hand side. Always there is a method to read the charts where the more number of points connect. Count the number of points connect. It's not from high or low where the support or resistance is formed. It's from the point where the more number of points connect. That is the key to identify the supply demand zones, the congestion of price action. So here is an example on the Nifty, like what we are drawn, the stop loss point. You can see instead of drawing a point on the downside here, where the more number of points have met and the confluence has happened, there we have taken an entry as well as stop loss is adjusted. If you apply the same stop loss here, let me mark it for you. The entry point as per the traditional method would have been here and the stop loss would have been here. So which would have been quite higher. Why? Because as per the high-low theory, you should have entered here at this point and the stop loss would be higher high, higher low below this. But what we have done here on adjustment, where the congestion zone beforehand we have taken an entry here where there is a price momentum breakout and the stop loss is adjusted here. That's what we are understanding, the confluence just below this, the previous candle low, the stop loss is adjusted just below this. So that gives us an edge to understand. We are going to learn the more tricks. I'm going to show it to you on the live charts, recent charts. Just understanding the concept is key here. Please be patient. I'm going to share with the live charts how to adjust it. This is the example, the concepts what we are learning. So it's all the adjustment, like where from right to left when you see that is a congestion zone. So this area of confluence where we can keep the stop loss just below this. anywhere below this could be the good stop loss area. The entry point also, once the action is taken, and the target price action here, similarly couple of targets where we have got how to adjust it to what we are learning. So this is one of the examples where from right to left we watch the chart and understand the areas of confluence. You need to understand the charts, you need to feel them where the more number of points connecting the dots is what analytics. So your stop losses needs to be adjusted with the lower risk and the lowest probability of hitting. It's not that you keep a stop loss here and enter the trade. So entry point here, this should be the entry point, this should be the stop loss point. So that is a traditional method what we apply. But here what we have done, once the breakout has happened, the congestion area has been closed here, the momentum has been gained, we have entered here, and the stop loss is just below this. This is what the adjustment is. Why? Because you can see from right to left how where the more number of points are connecting. We are going to connect the same dots in the real-time charts. You can ask me any of the charts. I can show it to you with an example of your choice, not my choice. Any of the charts I'm going to explain. So this is one of the examples. Let us go ahead here. So I'm going to give you a puzzle. Yes, I'm going to show it to you on Nifty as well. Recently, before that, we are going to discuss on the unconditional or revamped trend lines. I'm going to show just a 1 minute of quick puzzle for all of you. I have given you the 9 dots. Connect the 9 dots without lifting your pen or pencil. Just a small puzzle if you can work out. Yes, I'm going to show it to you on the candle chart. Don't worry. First, once we complete this puzzle, we are going to get into the charts only directly. A small puzzle if you can try to solve. Why? Because this will change your thinking. Place the 9 dots, connect these dots without lifting your pen or pencil. Just 4 lines needs to be drawn. Would you like to try out the puzzle? I'm going to give you 30-40 seconds of time. No, it's not a S shape. You need to draw 4 lines without lifting your pen or pencil. Okay, I'm going to show it to you. This is how, as quickly as we are going to use it. Just a small thinking out of the box. See, the first line is drawn here, just out of the box. Stretch the line 2, line 3, line 4. It's a kite. Just a thinking out of the box is where your analysis and your management of money would change, and it will yield you the super results. Super duper results would be drawn if you adjust a small thinking out of the box. Here is what we are seeing it on the trend lines. The traditional trend lines and the unconditional trend lines is what we are managing here. See, what we have taken here, we have drawn, connected all the trend lines. What has been done? The major start of the trend we have drawn where the more number of points meet. If we would have drawn a trend line from here, this would have been something like this. So it would have been a later entry. And here the major part of the trend has started is what we are seeing. From here, there are 5 points which are connecting. Here only 2 to 3 points are connecting. So which one is better? The first one. So first swing high you leave, from the second swing, first swing high or higher low or lower top. The second swing high or second swing low is what we apply to draw the trend lines. Everywhere where the more number of points meet, ultimately horizontal support or resistance what we use, where the more number of points connect, that would be the area of congestion. Why do we use those points? Because the traders have reacted and the most activity has happened. That is what we call it as congestion volume or compression area of supply demand. Where the more activity has happened, that area is most likely to be your major support or resistance zone. Below that only you can use your stops. So we have drawn the trend lines from the second point of the trend rather than from the starting point of the trend. That will give you the more areas. So we are seeing it here. So here again we have drawn the trend lines. Again we are seeing the trend line 1, the lower high, 3 points are connecting and a breakout has been occurred. The trend line 4 is more exciting. Why? Because this is an unconventional way of your exit point. Here, the circled point, what we are seeing is the earliest exit. It's a tower top kind of a pattern. The most earliest exit, what it has given us for the trade. If you would have entered here, even on a breakout, the exit which it has given just at this point, the earliest, you can use any of the other indicators, moving averages, it would have not given you the exit, because this will help you. The unconventional methods would give you the best of the results. See, here we are connecting dots. The trend line 3, we are seeing 1, 2.3 is a support, 0.4 again would act as a resistance, 5, 6 again acted as a resistance. So this is where we need to see and act where the more number of points connect. Trend line 7, we are getting the results where the short-term trend has got end and we would have got the exit. The next trade would have been above this. So the areas one need to understand where we need to draw the unconventional methods. So here is the example of the Nifty. Before getting into the averages part, I'm going to share the chart. Now we are going to see the charts, guys. No need to worry. I'm going to share the charts with you. See, simple things do work. You believe it or not, but a tweaking of the things works. How to adjust them in a simplistic manner is what one need to understand. So we are seeing a Nifty part of it now. See here, we are seeing a daily chart on the Nifty. What do we need to understand here? The upper trend line what we have drawn would have given us the exit here, which is one of the earliest. Once this support is also is broken horizontally, but the trend line, even the averages, if we see, it would have not given us the exit though. So here understanding the entry and the exit points is the very much of a key part of it. So what we are seeing in the trend lines, the unconventional methods also needs to be applied with the traditional levels. What we need to understand, the simple channel what the bank Nifty is acting, and I'm showing it to you on the Nifty chart as well. So everybody have asked the Nifty chart. So here there is a parabolic rise in the Nifty. What we have done, we are connecting the dots. I'm going to draw and show the parabolic rise, how it acted as a resistance, the support. Exit for the sideways trend has been clearly indicated with the simple trend line. Instead of drawing it from here, if we use the next second start of the trend where the entry we would have taken it in a simple way. Let us say the entry point hope the chart screen is visible to all of you. So let us say here is a breakout for an entry point. Instead of exiting here with the other indicators, what we have done, we have drawn a trend line from the second starting point where the major degree trend has started, the parabolic rise. We will call it in the Elliott wave terms, the wave 3 is what where we draw the channel or the trend line where the powerful move starts. That gives us the entry, and also the price action zone, what we have seen here from right to left, the congestion area of the horizontal lines. Here also we have used the key areas because there was a spike during the election at the June 4th, but the trend line what we have drawn here has given us exit points. So understanding the stop losses with multiple adjustments is the key. Is what one need to understand. The multiple ways to identify and draw the trends is the key to trading success. Yes, one needs to re-enter based on the again next trade, the confirmation which gives us. So starting of the strong trend, second part of the line here again we have drawn a trend line which has given us the earliest exit with the momentum waning out. Instead, if you would have waited for the different trends to be identified. So just we need to open up our minds to establish the trades and apply them. Right to left is what we need to watch where the more number of points connect. And for the trend lines also, we need to see the second start of the trend where the trend line needs to be drawn. Here also we are seeing, see the Nifty from where it has started around 19,000. We have started where the trend has started moving upwards. We have drawn the second part of the trend where the trend lines has given us the entry and the exits. So one needs to adjust the momentum as per the trends to get the gauge of the trend and the minimum loss maximum entry. See, if the same thing is applied on the 15-minute charts, that too works. No need to bother, no need to worry where the major degree of the trend starts. See, here one needs to adjust like this, which would have given us the most earliest entry or exit. I'm going to discuss the strategies of trailing stop methods going ahead. Once we learn these smart confluence zones, it's just a small out of the box thinking where we need to apply. Although we know, we learn, we are experts, most of them are experts in everything, but a small tweak and revamped methods what we apply would yield us the exceptional results. That's what we need to understand. The understanding of the key confluence zones is the key to trading success. A smaller the adjustments, much better the results is what we get. Here the start of the trend where The second lower top, we would have drawn the trend line and the exit would have been the earliest, and then again the re-entry. Obviously, that happens, which we need to go through it. So that's on the trends. Next, we are going to discuss the averages. Why it's important, I'm going to share. Let's get back to the shared screen. So there are different types of moving averages. See, moving averages, everybody knows for a breakout or a trading system people use, but it's not like that. There are two ways to use the moving averages. One is they can be used as a important support or resistance zones, or gauge of a trend, or your trailing stop loss methods. Multiple methods can be used. The three types basically it can be used as a trailing stops to get a gauge of a trend, or that would act as your support or resistance zone. I'm going to share. See, I'm not going to explain you the moving averages. We are not going to discuss about that. We are discussing about the methods, how to use it as you are riding the trend or trading methods. So there are different moving averages. The traditional method is you have to divide it into three parts: short, medium, and long term. Short as 5, 10, 20, 30, 50, 100, 150, 200. Okay. We have divided it to the different time horizons which will help us. So we'll see a 10-30 combination, 20-50 combination, or else you can use the Fibonacci numbers. 21, 34, 55, different numbers can also be used, which will help us. Let me get into the charts for that. So it will act as a ribbon, the gauge of the trend. Understanding the gauge of the trend is very much important when you enter into a position in a shorter time frame. This is a simple 15 minutes time frame what I have shared with you. When you take a trade, if it is trading below 50 period moving average, it has not broken, the trend has been in a continuation. Well, different parameters needs to be used. I'll share with you. Along with that, what happens, you can take a combination of two of the moving averages along with your horizontal clusters. What I'm doing here, I'm connecting the dots. First, the horizontal support or resistance, which we will use from right to left, the combination. Then the unconventional way to draw the trend lines where we are going to get the points. Now you are using the averages where you are going to get the points. So we are combining 3, 4, 5 of the parameters. So which is the high probable zone area, early entry, early exit, that will give us the results. We are not using only one parameter for the stop loss management. Whichever gives us the early entry, exit, we are going to use them. But basically the primary trend, what we have drawn here, volume weighted moving average, which is what we call it as a 144 line. 144 line volume weighted moving average. I'm going to share with you the parameters. No hide and seek. It's called as 144 line, which is volume weighted moving average. I'm going to show it to you as well. See, VW volume weighted VWMA 144 is what we have used, which until it is below that we are going to sell. Once it crosses above and gives a confirmation, we are going to Buy. See, these averages can be called as waves. When the waves are expanding, hold on to your positions, trail your stops and hold. And once the wave starts shrinking and it closes above the 10 and 20, exit the positions, and next the signal comes, re-enter the trade here. So let me mark it also for you. Let us say our first entry is somewhere here, this zone. Entry zone, continuously we are riding the trend. Here, this point we got exit, short exit at the first. Then again the re-entry of the trade short here. Again, the short exit has come here. Two trades, short entry again. We are not closed. We are not closed. The exit has been got here. So how we need to trade the trends in a short term with the simplistic manner. See, I'm not going to buy anywhere once until it is lower. The sideways, obviously, we are going to hit a bit, but now it is getting higher above this. And once I get a short term trend confirmation, a trend line is broken, I'm going to enter into the position. This is a bank nifty 15-minute chart. I'm sharing a simple strategy with the waves like a 10, 20, 30 moving average, what we are using as a gauge of a trend, and the entry point reference only selling is used. Hope you are getting all the points what we have discussed. A simplistic manner what we are learning. 143 is a Fibonacci number, so we are using a 144. It will give us a gauge of a trend. It is time tested, proven. See, here we are seeing again, once the buy entry has been given as per the price action confluence zone, the entry point has been taken. What we are seeing, the first entry point on the higher top, higher bottom, and the gauge of the trend here, we have got exit, and again a re-entry has been taken here. The trend has been ridden continuously, one small exit, again the re-entry, but here the stop loss is triggered. Here the entry has been taken, exit near the cost, the next entry has been taken here. How we are riding the trends with the different methods. Obviously, this is one of the methods what we are learning here. I'm going to share more of the methods with you. No need to worry. I'm going to share. See, the entry point is what the 144 line what we are learning, and that is for the gauge of the trend. The waves, simple averages which would act as a gauge of a trend as well as support and resistance. The simple 50 period average is not broken on the upside, and on the downside also we are seeing here when we are trending only once we have got a close just on a 15-minute time horizon, and we are not going to have a buy entry even though if it is trading above 50 period average, because it's below the trend advantage 144 line volume-weighted moving average. So a simple manner is what we are using, the 144 line. I'm going to discuss the trailing stop methods. Before getting into that, we are going to learn more insights on the risk management, money management, and trade management. So using a combination of averages is a key, and adjustments for Nifty, it should have a different parameters. A small adjustments needs to be done. For Bank Nifty, the different parameters needs to be adjusted because the beta of the Nifty as well as Bank Nifty both are different. See, the risk management part, risk reward ratio 1:2. Always set up your trades and trail your stops. Don't, if you have a target above 1:2, book 50%, ride the trend with the trailing stops. That will make you a better trader and your profits will increase because risk management 1:2 minimum for day trading, 1:3 for swing trading. even if it is 1:3 or 1:4 for day trading, I would prefer it would be best, because protection of capital, the power of defense is very much important. If you have 100 rupees, if you lose 50, it will be 50% of your capital lost, wiped out. But to make that 50% again from rupees 50 to 100, you have to make up 100%. So that's the risk management. It's not whether you are right or wrong, as quoted by George Soros, is important. It is how much money you make when you are making profits, how much you lose when you are losing. That determines your success or failure as a trader. I'm going to share a money management rule with you. We are going to learn the super trend strategy. I'm going to share a super strategy with you, how with a different time frame one needs to ride with the volume-weighted moving average as well. We are going to use. Before that, I'm going to share with you, because why it is important, RMT, risk, money and trade management. You can see our video also. I'm going to refer it there. As quick revamp here. Risk management, money management, why it is important. Even if you don't have any strategy, you can make money. Still 50% is your accuracy. You can make money, as we are seeing here. Trade one, like 100 rupees, you are buying something, 120 is your target. Stop loss is 90, 10 points risk, 20 points profit, 1:2 risk reward ratio. 10 trades you take. Out of that, 5 you win, 5 you lose. 20 bucks you make in the first trade, 5 trades, 10 bucks you lose in 5 trades. Still you are with a profit of rupees 50. Just a 50% accuracy. If you increase your risk reward ratio, 40% accuracy can give you the profits, even 40% of the time. Let's come to the mainly money management part of the trade, where we are going to learn. So we are going to take an example of a Nifty 25,000 P. If I have a 1 lakh rupees capital, let's say the option price, put price is 100, stop loss is 80, lot size is 25, 2% risk. What, how many lots I have to buy? The position sizing, 100 minus 80, 20 points risk, 2% of 1 lakh is 2,000. So 4 lots maximum I can buy in a trade. That is the money management part. Trade 2, trade 1, if I lose, my capital will become 98,000. Again, the iteration process starts. 1,960. So only 3 lots I can buy. Then the capital reduces to 96,500. As the trade goes on, the second trade also, if I lose, then only 3 lots I can buy. So that's how the iteration process goes in the risk as well as money management part. I'm going to quick brief as we are going to understand. See, even if you toss a coin 50 consecutive times, what is the probability of head or a tail? 50-50, right? You guys agree with me? It's just 50-50 without any strategy. If you manage that, yes, please, I'm going to show the indicator settings as well. We are going to learn. I'm also going to share a super trend strategy. Please be patient. We are learning a money management part. Even 50 consecutive trades, if you lose, you will be left with 35% of the capital. And no way you are going to lose 50 consecutive trades. If you toss a coin, you don't have a strategy, you are not going to lose. If you lose 50 consecutive times, you are the most unluckiest. So stop trading. That's how money management, like just risk 1, 2 or 3% based on your comfort. Not more than that. Money management is key. That is where the stop losses, how many lots one needs to enter, the position sizing hits the key. See, trading is a complete life cycle, what we need to understand. Entry, exit, and error. That's why we are learning the one part of it. We are not learning the entry part. We are not learning the exit point. Here we are learning the error point in this workshop. In this webinar, we are learning the mainly the stop loss part, how to identify the key clusters, the trading temperament, because if we are comfortable losing what we have taken a trade, what is at stake, then you are going to ride the trend. There we are going to make the profits. If your defense is strong, always your attack, whenever you get a loose ball, you are going to attack. That's what we are learning, which is the most important point. It might be boring, but practical application in a simplistic manner, adjustments is what we need to do. Everybody might know the moving averages, trend lines, super trend, volume weighted moving average, but the adjustments, the small techniques, how do you see the charts, the price behavior from right to left, understanding the behavior of the markets, behavior of the stock, what you trade. See, to make profits, if you observe the stock for 15 days, you understand the behavior, even with your family member, when you get a new family member, you marry or you get a child, you will understand the behavior and the pattern. We are addicted to patterns. As a human beings, we are habitual in creatures, so understanding the behavior of a stock or a nifty or a bank nifty is very much important. By understanding that behavior, seeing from right to left, the charts will speak with you. So there you will get the points where you need to adjust your stops, lower your risk, the techniques and the methods and the modes which one needs to understand and apply it to become a successful trader. A minute adjustments and a disciplined approach will give us the better results. So the error part, the stop loss part is very much key to your trading. Your stop losses might be triggering, but adjustment of them by 10 paise or 20 paise or small bits, you can adjust your stops and your stop losses will not be triggered. It's both a combination of art as well as science. It's not only the technical part which will give you the results, it's your art and skill what you train yourself. And once you take a comfortable positions with the money management, your temperament, your mind will be cool, composed. Like you will feel the anxiety when you are taken 20 lots instead of 10 lots in any trade as per your capital. So that's what makes sense with the money management. Ride your profits, cut short your losses. As I showed you the simple waves of a moving averages which can help us ride the trends. Exit points, horizontal as well as the unconventional trend lines should give us. Now the trailing methods, super trend, moving averages, I have already discussed volume weighted moving average. Now we are going to learn the super trend strategy. I'm going to share with you. Let's get into the charts rather than discussing it here. See what we have done here. Again, we have used a 144 line, which is giving us a gauge of a trend. It's a bank nifty index. This is the recent chart of a bank nifty what we are seeing. After that we have applied a super trend. The 144 line is giving us the gauge of the trend. Simple method. If it is above the 144 volume weighted moving average, we are only buying, we are not selling short, we are not selling short. And super trend is helping us to trail our stops. The parameters of a super trend I'm going to share. 34 and 5. ATR period is 34. You can note it down. Multiplier is 5. Because the shorter the time frame, you have to increase your indicators parameters. You can't keep the traditional parameters for the super trend. Everything has got a tweaked approach where we need to adjust our methods. So what we have done here, we have adjusted the parameters. Instead of 22 or 23 would be there, multiplier would be 3, ATR period would be 20, but for the adjustment for super trend 34 and 5 we have taken. Again the same volume-weighted moving average. See, you are a very short-term trader. I'm going to share a small trick with you. Get a gauge of a trend with the super trend and the V volume weighted moving average 144 line. If it is down, use the 3 minutes chart and or a 5-minute chart instead to take the trades on the sell side. Until on a 15-minute sell is there. See, let's see the bank nifty here. We have got a sell near 53,800. What we need to do on a 5 minutes, like around 53,800, here we have got a sell. Let's say we have got a sell. Roughly from there, it's continuously selling. Every time you get a sell in a 5 minutes, just sell it, ride the trend, exit with the super trend, trail your stops. But your reference point would be the higher time frame where the primary trend is bearish, only selling has to be done. And while until now, the recent trend, we are turning bullish, but just now we are trying to cross the 144 line. The next trend, I would be only buyer, the confirmation. Let's see the historical chart here on a buying note, where the bank nifty moved up. The buy has been triggered here above the previous swing high. The trend confirmation was given, let us say, somewhere near 51,500. That is 24th September, what we are seeing a trend. Simple parameters. Can you apply the simple parameters systematically? Can you follow regularly the same method? It will give you the results. I'm using just a simple 5 minutes and a 15 minutes. 24th September chart, let's come to. Although as we have seen a sell side, now we are seeing the buying trend. We are seeing the recent short-term trades, how one need to apply, that's all. Nothing much, nothing exceptional. If you can trade only one time frame, you are adaptable to 15 minutes. You can ride the trend as a swing trader, that is well and good. Just a simple method. That is 24th September. I am going to come into which is some 51,500. Right, guys? Let me come back to the chart again. What is the date where we have got? Oh, sorry, it's 12th September. 12th September where we have got the entry. See, my other parameters can be combined. What we had discussed, the waves or even the horizontal support or resistance. Here it will give us a clear entry with the horizontal rounding bottom kind of a pattern entry has been given with the trend line confirmation. So the buy signal has been triggered here only clearly, but we are buying above 144 line, 15 minutes confirmation, 51. 500 above we are given an entry. Let's say in this candle we have got the entry. I'm going to mark it the zone. $51 for 400 to 500. We have got an entry on a 15 minutes time frame. So what happens from here? The continuously trend has been ridden. Entry has been done here. The continuous rise of the trend here, once we have got a exit below the 144 line or the super trend, exit has been given again, a re-entry has been taken here. The re-entry has been taken here. That's how we have been riding the trend. Exit has been given here. Once the confirmation is there, the entry gap up, you can avoid also, you can take also. Both the cases, one needs to watch the risk reward ratio. it is a failed trade. Buy also fails. It's not that foolproof system what we are discussing, but it works beautifully to write the trends, how to identify with the two periods, like multi-time frame analysis, what we are giving and getting the results, the simple way how the trends can be written with the combination of other parameters, we are going to get the best results. I'm showing it you now on the super trend how we are using. You can use the waves combined together and multiple other things. We volume weighted average until it is given a sell in a 15 minutes, which is somewhere around 26th or 27th September. Let us say, yes, 27th sell has been given on a 5 minutes, but yeah, 27th only we have got a sell here also, but bit lower on a confirmation that reversal is confirmed. From there, we are going to be on the sell side. We are going to avoid the wrong side of the trades, and also the trailing method will give us the beautiful results. See, the averages, its period is very simple. 10, 20, 30 or 10, 20, 30, 50 can be used in a very simplistic way. Moving averages is just one part of it. They are lagging indicators. The adjustment of the parameters is very much key. We are using 34, 5 for super trend, high low close for both for the same for 15 minutes and 5 minutes. For bank nifty, for nifty, well, if it is lesser volatile, then we need to see and adjust to increase the parameters. So small adjustments needs to be done is what I believe which will give us the results. So apart from that, volume weighted moving average we have discussed. Moving averages, well, I would use the exponential and triple exponential moving averages. Personally, for my trades, super trend, I'm going to adjust based on the parameters. VWMA 144 line, I would definitely use, which will give us the results. Well, unconventional methods, the supply demand zones, I have shared a small part, the 4 to 5 parameters as discussed, as I have promised with you. If you apply the same things for the trailing stops as well as your stop loss adjustments, which will give us the great results. So, before getting into the much part of a session and your Q&A, I'm going to share a small workshop like this tricks and the advanced techniques and strategies which we apply from the 15 years successfully for our research in our research desk. If you'd like to learn, we have designed a precision price action workshop where we are going to learn the supply demand zones, zone marking process, also a smart PF confluence zones, the advanced Fibonacci concepts which you might have not used, where we are going to learn the entry exit stop mechanisms, how to increase your winning odds, success ratio, the detailed price action you are going to learn, even the advanced price action. NPS price action is a man who made from $13,600 to $2 billion. The methods, what he applied, you are going to learn the reversal strategies, different methods of dancing lady strategy of the price action, compression, liquidity spike, the gamma blast when happens in the option, how to identify beforehand, the multi-bagger options, how one can identify with the spike model, the liquidity spike where it occurs with the options, where we are seeing nowadays where the multi-bagger trends. We identified last week mid cap nifty short position 12,600 PE. I can show it to you on our this one as well. From 3 rupees it went up to 116. So that we are going to learn how to identify the multi-bagger options, the mean reversion strategy where you are going to get a important area of reversal zone, the Takeshi who made from $13,000, as I said, to $2 billion, a bedroom day trader, how he used the mean reversion in Japan from 2000 to 2008, where the market crashed. He made a fortune. We are going to learn those strategies. and also you are going to learn in the price action how to position size, RMT. Ultimately, you can have a one-on-one consulting with me. Ultimate key to trading success. Your position sizing based on your capital. I'm going to give you a blueprint of your trading system with one-on-one consulting. Then a blueprint of your trading plan, set your goals, action, execution, success mindset. We are going to learn all this in an advanced price action workshop, precision price action decoded. If you would like to join our workshop, here is an offer for you, a beautiful thing what we have designed for a real-time application for price action traders, precision price action workshop, which would cost you 18K. Live trading room access. You are going to get a live trading room, whatever you have learned for 1 month, which is for 5,000. 1 month access. I'm going to share daily 3 times from 15-minute sessions. Objectively, I'm going to educate even if you are a working professional. The trades what we have taken, why you have taken, what you have learned, practically you are going to apply in the live trading room. Also, I am a SEBI registered RA, Raju Angadi Vishwanath, you are going to get a advisory access where I can provide the complete bundled package of 27,000, a bonus weekly trade quest webinar analysis, like the next week prepare your trades, educational and trading community webinars. You can attend the same workshop. Live trading room 1 month access would be there, advisory 1 month access would be there. Same workshop can be attended twice in a year, just at a limited time offer 499 plus GST. If you register now, we are going to start the workshop in the next month. So that's a brief on the precision price action workshop. I can show it to you on a webinar screen. So live trading room, SEBI registered advice, as well as combined together, you will get a price action workshop, which, as I shared the content, you are going to learn n number of things with a real-time application. A live trading room alone would cost you 499, 4999 plus GST. But here, the price action workshop, along with the SEBI registered advice, you are going to get a value for your money with a complete support, weekly analysis. So you are going to learn the practical application with me. It's completely like a hand holding, one-time limited offer workshop. You can go to the webinar website and you can register now with us. A very limited time offer for the first 20. Just it is 4,999 excluding GST. So say yes who are interested really to join with the live trading room, SEBI registered advice, and the price action workshop. I'm going to share all the insights and the real-time application of trading strategies with the research and trades. Only one trade can recover your investment. So the best interest is what you invest in your education is what I feel. So would you like to take a step forward and learn, earn and prosper with a price action real-time application strategies? Just act now. Say yes. Yes, guys. Mr. Sureshan wants to register. From now, we have one more offer. What I'm giving, you are going to join our SEBI registered advisory and live trading room from next week, tomorrow itself, in advance before we get into the workshop part, which is registered on 23rd and 24th. So that's a bonus for you. Almost like around 2 months you are going to get advice. So live trading room access 2 months, 2 months advice, and the workshop, the price action is what you are going to get into. So guys, hurry up, only for the limited time. we have this offer. It's as you see the value, what the content is. If you feel any queries, please feel free to contact the webinars team. Also, I'm going to take a Q&A. So few of them are raising the hands. You can ask the queries not only on the workshop, on the strategies and the stop loss management techniques, what we have discussed. I can talk with you, answer all your queries, guys. So I will just unmute you all. Yes, our team will contact you, Mr. Mohan. So Raghunath wants to speak with me. You can unmute yourself. I have just requested you to unmute. Please feel free to talk with me. It's an open discussion now. You can ask any of the questions. Sir, you can register in a webinar site. You can contact Mr. Chandru. Webinars, this one has been given. The webinars courses, mastering the price action. So live trading room timings also will be shared like around 9:45 or 9:30 to 9:45, 15 minutes objectively, and the European market updates and end of the market closing session. We are going to share what we are going to learn, where the markets are headed, how the market should be doing. So please, those who are raised the hand, unmute yourself and speak up. Miss Swati wants to speak. If you want to have any questions, feel free to ask. Not only on the workshop, you can feel free to ask regarding what we have discussed. Training would be from 11 a.m. to 6 p.m. from 23rd and 24th October. We have planned it. Sorry, November. Till then, live trading room only 15 minutes. Objectively, you are going to learn. Whenever you are free, we can attend. You will be in our, once you registered, you will be for 2 months, you will be in our Telegram channel where you are going to get the trade ideas. Hello.
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 Yes. What I wanted to ask is, you showed the
So
moving
your
averages.
voice is bit low. Can you speak bit louder, please?
Yeah, yeah. You showed the entries at the moving averages. Three lines comes uh, the closer and they go wider after some time. I didn't exactly understand what is the entry point. Like at what point you take an entry or exit.
See, main agenda here, what we discussed is here we have discussed mainly the trailing stops and the stops. Entry point, what do you need to plan? Either see, simple entry point I'm going to share here with the super trend. Let us say if we are taking super trend and a 144 line. So once the trend has changed 144 line, you get a lower top, the price entry below the previous low.
Huh.
The
Okay.
entry point would be this below the 144 line, and the super trend also is a sell in a 15 minutes time horizon. If you are a very short term trader, you want to adjust your stops, you can take it to the 5 minutes again. As 15 minutes is a larger degree trend, you trade with the 5 minutes entry.
Okay. Hey, what about the three lines you're showing? Out there
Yes,
we
yes,
know the
I'm
entry.
showing, I'm coming back here.
Okay.
I'm coming back here.
Huh.
Again, the same 15 minutes. This one we have used the three lines 10, 20, 30 moving averages.
Huh.
It's all exponential what we have taken as a ribbon. So here again below the 144 line, we are taking an entry when the waves are down and it's expanding. We
Okay.
call it as a like Bill Williams moving averages also we use. Kind of averages like which is giving you a gauge of a trend. Just using the moving averages, there are multiple uses. How you use it and tweak it is much more important. Once these waves are expanding, until they are expanding, obviously the trend would be in the direction either on the upside or on the downside. Once they shrink, see here the waves like averages are shrinking. It's not an entry point. Why? Because the congestion area starts where the more stops would be done. The 144 line what we have taken, it's below that, so we are not buying. Once it is crossed, here the stop loss may have triggered. but it has given an entry, right?
Yeah, right.
Right. Thursday, 10th October, we have got an entry, sir.
Huh.
Small stop loss is triggered. Now we are waiting for a next entry as the averages has been crossed, and we are using the multiple short-term patterns and indicators. This is what I'm showing. It's the mainly on the stop loss management. In the context of the session, how do you adjust? Apart from that, additionally, what I shared, couple of entry points as well as the gauge of the trend, which would help you manage the proper entry exits. Once the trend is down, just trade on the downside. Be very simple. Once the trend is up, use the multiple combination of parameters. The smart confidence zones I have discussed at the earlier part. Now, volumetric moving average we have discussed. There are even pivot points and Fibonacci, but due to the time constraint, I have shared, as I promised, the 5 parameters: volumetric average, the support resistance moving averages, trend lines, as well as super trends. The 5 methods, if you combine together, you will get a better results.
Okay, right, right.
Hope it's clear.
Yes, but then like in both the cases, we are not looking at the either the super trend or the moving lines. We are just taking the 144 line as an entry.
See, 144 line is a reference point for the trend. It's not for the entry. The averages below, obviously, it's used as a trailing stop loss method. The averages or super trend, obviously, super trend entry only we are taking. But below the 144 line, we are going to only sell.
Huh.
Above the 144 line, we are going to only buy.
Okay, so we are taking the super trend as an entry out here, and
Yes, yes.
okay, and
Super
in the
trend with a combination of price breakdown. Obviously, I would use apart from averages, I would use the price.
okay, and in the this thing moving average thing, what do you take as an entry then?
Moving averages again same below only I am selling here. The trailing stop loss once the two averages like 10-20 is crossed and closed, I am going to exit my position in a short term. Then again I am going to re-enter if it's on the sell side only.
Nee, what's the entry point for this thing? This point, this
Let me mark it for you. Let
huh,
me mark it for you, sir. Hold on for a moment.
wait.
Let's say here is my first entry point.
Yeah, what's the entry point? What exactly is that entry point?
This would be my first entry point.
So why is that a entry point? That's what I'm asking.
See, that's what I'm going to share, sir. One, it's below all the averages what we have taken.
Huh.
The second condition is trend has changed. The previous low has been broken.
Okay.
This is the previous low which has been broken.
Huh.
The price area of congestion from right to left, you can see which was acting as a support. Here, this zone, it has been broken.
Okay. Right. Huh.
And also, averages are trending down.
Right. Huh.
So, there are the 3 parameters what we have used.
Okay. Okay.
So, based on that, we are taking an entry. And here it comes a exit. 10-20 average close. If we are using this as a trailing stop, again we are re-entering here
Huh.
somewhere once the price is confirmed and a breakdown has occurred.
Okay.
Then the waves have started expanding. We have got an exit here.
Okay.
Third entry would be here.
The breakdown. Yeah.
Yeah.
And just a minute. First exit. Why are you taking first exit out there? First exit.
Because first exit why I'm taking, it is closing about 10-20.
Okay. The price is closing about 1020. Okay.
Defining the rules, obviously there are multiple things which we need to work on. But what I'm trying to say, how to trail and adjust the stops and be in a trend. Here in the context what we have discussed are trailing stop loss methods as well as to get the gauge of the trend and how to adjust your stops with a minimum risk. See,
Right.
obviously, if this entry is there, let's say the third entry, what I shown you, sir,
Huh.
here,
Right.
the candle is very big.
Huh.
If you keep the stop, this would be higher.
Right.
I am using these averages. as a 50 or 60% of the trend with the price action above only I would place, this would be my stop.
Huh.
Rather than above this as a stop, I am adjusting my stop losses. That's what the agenda of the session, right, sir?
Right, right, right.
The adjustment here is the key where the risk could be mitigated. There are multiple other methods also what we use, the price action workshop what I shared, the NPS price action, where you'll get a first stage confirmation entry and adding on to the position on a confirmed breakout. So lot of things are there which we need to discuss as well. But due to the time constraint, I shared as much as possible. Hope it was helpful for you, sir.
Yes, yes, obviously, it was very helpful. Thank you very much for this.
Now it's clear for the entry and exit part of it.
Yes, yes, completely clear.
Fine, fine, sir. Thank you very much.
Thanks.
Any more queries, sir?
No, no, that's it. That's it. Thanks.
Fine, fine. Definitely, our team will contact you for the payment link, sir, in a few minutes time horizon. No need to worry. I'm going to share with Mr. Chandru. Training will be from 11 to 6 in the weekend, so no need to worry. You will get the recording. Yes, this session recording also you are going to get. No need to worry. You are going to get it in a webinars site. You can contact Mr. Chandru. Our contact number is there with the webinars team. Will definitely help you for all the details. So feel free to ask.
Hi, hello.
Yes, sir. Please go ahead.
Uh, Thank you for this session. Actually, I wanted to know how we will protect our capital in case of swing trade and overnight positions.
In case of overnight positions, obviously, when you are trading with derivatives, there is a unnatural risk always associated. What
Hmm.
do you need to do? You need to use the hedging strategies like buying the puts and then again, if you are on a buy position, buy the puts as a hedge and then
Okay.
sell the higher calls to mitigate the risk. Overnight, obviously, there is a risk associated. The stop losses can't be placed. You hedge it. Small part of your, if you are right, small part you'll be losing with the premiums decay. If you are
Hmm.
wrong, obviously your capital would be protected.
If this wave expansion is more, then can we keep this naked position overnight? Because the wave gap
But
is
then
more.
again, what the wave expansion is there, whatever it is, again, here purely what shorter time frame we are discussing. On this
Hmm.
context, what I'm talking, sir, it's basically for intraday. If you are going for a longer time frame, obviously, if it is working well, if you are a
Hmm.
swing trader, obviously, small adjustments, same things will work. Expansion is there, you can hold on.
Hmm. Yeah, actually, because I'm asking this because mainly the main trades or main benefit comes out from gap up and gap down. I'm just wanted to know that is there any method to utilize this gap up or gap down?
See, there are different methods, sir. Gap up overnight position you need to take based completely on a mean reversion strategy. Obviously, some hedging needs to be done.
Hmm.
Small hedging, very limited trades. Whenever the opportunity arises, you have to capitalize on it. There are methods for it.
Is there any method to identify the opportunity?
Obviously, the key reversal zones, you need to identify the key zones where it can high probability of reversal points you need to act upon. There are different parameters which you have to combine. Like
Hmm.
what I discussed in the price action workshop, the gamma blast, where the liquidity
Hmm.
spike could happen, the compression theory. Uh, that zone of reversal you need to identify and you need to work on that precision.
Okay. Sorry, I missed that Gamma Blast session. I
Yeah,
joined
you'll
it.
get a recording, sir. Definitely, you'll get a recording. This in the workshop we are going to get in more detail in the price action workshop where we will point those
Hmm.
reversal zones because those reversal zones are very much important where there is high chance. Obviously, there will be nothing 100%.
Hmm.
Those
Hmm.
points of
Yeah,
one.
there are probabilities. Uh,
Yes, yes.
High
So what I
probability
would
and low
suggest,
probability.
even when you have a 90% probability,
Hmm.
you better take a hedge.
Yes, yes. Yeah.
But when only there is a big move expected, take a hedge and act near the zone of confluence, the price congestion, what I say. Don't trade for
Okay.
the gap up, gap down, small moves.
Hmm.
Because the hedging, what you do, obviously you have to profit as well.
Yes, yes. Actually, yeah, because
Without, hmm,
hmm, because I have
with,
noticed in case of Bank Nifty that whenever there is a big thing is happening in market, it gets adjusted in gap up or gap down, and we
yeah.
miss the whole trade in intraday.
See, ultimately, you have to set your goals. Like,
Hmm.
what's your capital? Does it suit me as a swing trader? Can I, if any drawdown occurs, can you bear it? If you have a shorter capital, then obviously, what you have to think of, you have to adjust. Even after a gap up, there will be some consolidation, and if it is a continuation, you will get a trade entry with these parameters.
Yeah, better that would be to keep hedge position.
Continuation of a trend. If you are comfortable keeping the position and handling the risk in a proper way, then it can
Hmm.
be done. Definitely, it's worth if you can manage it in a proper way. See, there is also a plus, there is also a minus with the overnight positions.
Yes, yes. I think with hedging, position hedging, we can do that.
Definitely, definitely agree.
Okay. Thank you for this session, sir. I will call. I have given my number to contact me. Uh, I will join this session.
Definitely, definitely, sir. The team will
What?
contact you. Oh, will be in touch, sir. Any queries, please feel free to contact me as well.
Okay. Thank you.
Thank you, sir. Thank you. Hello. Hello. Any more questions or queries regarding the strategies what we have discussed or else regarding the workshop? Please feel free to ask. You can write up in a Q&A. Also, you can raise your hand, unmute yourself and speak with me. I hope there are no queries or no questions. Hope all of you enjoyed the session. It has been insightful for all of you.
Hello, Raju
Yes,
sir.
sir. Yes, sir. Please.
What would be the live session? Sorry, the training sessions timing?
Training sessions November 23rd and 24th, we are going to conduct 11 to 6 would be there, but live session every day it will be there. What we'll be doing around 50, like around it will be 45 minutes, 9:30 to 9:45 or 9:45 to 10, where objectively I'm going to give the trends, which are the
And
stocks trending. Every day live, whenever you are free, you can attend, sir.
these
Like
training
around
sessions would
50
be.
live
Mhm.
session, like same charts I'd be sharing, some trade setups with the price action I'd be sharing weekly. We will be having the community webinars, live session, like 15 minutes in the morning, European market timings 15 minutes, 10-15 minutes, hardly 8 to 15 minutes. It's not even 15. Like you are going to learn what's the trend, how the markets are reacting, what are the stocks which are trending, what could be done, and any trades given on a telegram, obviously the rationale would be shared why we are taking. So it's a practical application as well as the workshop you are going to learn.
Okay, and no, I'm concerned about this live, sorry, training. That would be weekly training, na? Saturday, Sunday only,
Yes, weekend only, sir.
weekend only, and it would be for how much month?
So it would be 2 days complete workshop, but practically what we are applying it here all on the live. 1 month you are going to apply the live whatever you are learnt in the training, as well as
Okay,
you are going to get a research.
okay.
Means the
Research
main
and
is a combination of learning with the practical application is there, sir.
okay, understood. Understood. This live session and live session and this training would be for 2 months only.
Yes, training you can attend again once next time when we are conducting you can attend once more also if you have any doubts or you would like to seek to learn more
Hmm.
what I'm offering you, you can 1 year,
Hmm.
in a 1 year twice you can attend the same training. You will be having the recording access, but if you really want to attend
Hmm.
practically, this
Hmm.
would be for the live trading room would be for 1 month, but actually as we are starting now, next month is the workshop, you can join. Next week, somewhere around the live would be going on. You can attend after the workshop 1 month, and also 1 month access you will be getting here.
Yeah, actually, because this 23rd and 24th, I would not be able to attend. I would be
Now
on
it's November, sir. November.
November. Okay, November, maybe it would be possible. So after joining this paying this fees, I would be, I think, able to join these live classes from which
Yes,
date?
yes. Next week you would be giving you given access to the live trading room. You would be attending there. Also, you would be getting this one research trade setups in the Telegram channel.
Okay, thank you.
Live trading room, anyways, we are not spending like around very objectively, because most of them are working professionals. We are not simply dragging and speaking. Even I would be giving research to 2 3 companies. So
Hmm.
objectively 8 to 15 minutes I'm going to explain what's the trend, where it is,
Hmm.
what needs to be done, overall what could be the trades, if any trades are taken, why we are taken. So a
Eh,
practical application 3 times a day. Timings
okay.
also is there, so you'll be getting all those access where we are going to get the gauge of the trend.
Will that research would be or that trade would be combined with the fundamentals of the stocks?
No, purely technical analysis with price action and Elliott waves. Whatever it is taught in the price action, we are going to discuss most of the concepts in the live trading room.
Hello,
Sir, the most of the concepts, whatever
hello,
it's, am I audible, sir? It's clear?
hello, sir. Am I audible?
Yes, you are. Go ahead, please. Yes, you are audible, sir.
Hello,
Mohan sir, you are audible. Please go ahead. Hello. Hello.
hello. Am I audible?
Yes, sir. Please go ahead. You are audible. Hello. You are audible, sir. Please go ahead. So, guys, hope I've answered most of your queries. Hope all of you enjoyed the session. Please say thumbs up and say yes. What are you waiting for? Learn, earn, and prosper with the price action, live trading room, and the SEBI registered RA with me. You are going to get a hand holding support where you are going to learn the strategies, one of its kind first workshop where the practical work application would be there. Also, you are going to learn lot of techniques and strategies here. So that's it for the session. You are going to get the recordings. Join now. We are going to help you out by hand holding in a live trading room, plus a workshop where we are going to learn, as well as the RA SEBI registered advisory in our Telegram channel. You are going to get the updates. Exciting times ahead as a community, as a traders. Why I'm intending it to share with you here is, as a trader, we all needs to evolve and become successful. As the SEBI data hints, 7.2% of the traders are successful. Let's be a part of it in a winning community. Let's learn, earn, and prosper. Let's grow together. Are you guys ready? Still, you are thinking, you have any questions? Feel free to get with our webinars team. If you would like to connect with me, get in touch with me. Hope I answered all your queries. Shall we wind up the session? So that's it for today. Have a happy and prosperous weekend. Also on a today evening, we are going to provide a recorded weekly analysis, trade setups with the stocks and the trends. What for the forthcoming week, do subscribe with our webinars weekly analysis where we have shared it. You are going to get the weekly insights. You can prepare for your next week. Thank you everyone, guys. So, sir, please, I would allow my team to contact with you, Mr. Suresh, and I would allow my team to contact with you so that you can have access and the payment gateway needs will be cleared for you. Thank you everyone.